Welcome to Kitco News. I'm Niels Christensen. Talking to us today about the new normal in monetary policy is Adam Button, Chief Currency Strategist at Forex Live. Welcome, Adam. Thank you for joining us today.
Hi, Niels.
So you mentioned something on your Twitter about New Zealand Governor Orr talking about monetized debt. To you, this is a game changer for financial markets. Explain why this is so important and the significance of sort of markets ignoring these comments.
Yeah, I think it really haunted me even over the weekend. I think if you look at last week, it was an insane week in oil, and we're living this dystopian reality of COVID-19. But he came out and he said he was open-minded about direct debt monetization, which is really central banks financing government spending, which really means devaluing the currency to spend, really admitting that you're never going to pay it back. And is it an utterly insane thing for a central banker to say? There was a little bit of New Zealand dollar selling, and then almost nobody even wrote about it, like even noticed that he had said it. And if we look at the history of central banking, we think of central banking right now as inflation targeting, that their mandate is keeping prices up and avoiding deflation. But really, that's a modern part of central banking, and it's really the secondary function of central banking right now. The primary one, since the dawn of central banks, has been to separate governments from money, so people can retain the value of their governments. So you can have a government like Italy or Greece that spends irresponsibly, and the people can still retain the value of their wealth in the currency. And you have a chance in a democracy to get rid of them every few years in an election and bring in someone who's more responsible and eventually muddle your way along. So you can have a poor government and a bad government, but still maintain your wealth. But if you merge those two units, like they're talking about doing in direct monetary financing, you really devalue all wealth and all currency wealth.
Well, I was just going to say, so this is New Zealand Reserve Bank. Do you think this is going to be something that more central banks are going to talk about? ECB, Federal Reserve, Bank of England, Bank of Japan. Is this going to be the topic in this new normal?
Well, so you hear it and you're like, well, that's got to be some kind of slip up. They'll reel it back in, and then they did it. And Governor Orr in New Zealand is a trained economist. He knows what he's saying. I find a hard time believing that's a slip. So you think he's floating it out there to see what the response will be. And then you think, okay, maybe others will do the same. Can you imagine the Fed saying it will support any amount of debt the U.S. wants to take on? It will monetize. It will buy it all. It would be mind-blowing to hear that. And yet that's what happened, and the world collectively shrugged.
The Federal Reserve couldn't even admit that it was engaging in quantitative easing when it was increasing their balance sheet. So it's
So that, and if you think, people point out that the Bank of Japan has really been doing this for a long time, and they're right. But to openly do it is another level, and really it's not necessary, which makes it so bizarre. The Bank of Japan has done it for 20 years, and they get away with it by saying, once in a while they'll raise the VAT tax, and they'll talk about, reeling it in, eventually paying it off, kind of creating this illusion that everyone plays along with, that this will one day be paid back, even though, Japan's getting older, the population's shrinking, and now we're in COVID-19. So the game kind of continues to go on. And that really might be the story of the next 10 or 20 years, is how far we can go down this road of monetary financing. Because if you lower the level of the currency, everything else kind of rises in relatively. You can play this game with yourself that your wealth really isn't being eroded. But there's one asset that is sort of the ultimate preservation of wealth.
So what do you think? So what is all of this debt monetization theory do for gold? Obviously currency debasement, that's the big hedge for gold, is against currency debasement. So is this the perfect environment for gold then?
It really is. You can't script it any better than this. And it's the whole world doing it. the funny thing is, it's actually better if everyone's debasing currencies at the same time, because then you don't have these wild imbalances. Now, I suspect we will have that to some extent, because some places will go more all in than others over time. And so you have that money sloshing around into different currencies, who are doing less of it, perhaps. But I think in gold, even in the bigger picture, like nobody is on the debasement trade at all, really. And gold still doesn't have that moment where it's captivated broader investor interest. And I think once we get over, to new 8-year highs and then eventually to new all-time highs, then that money just starts to flood in, and you have this, the snowball rolling downhill. And I think the sky is the absolute limit. Especially you have MMT coming out. You have all kinds of bailouts just over and over again. This dam has burst now in bailouts, and this to think this is going to be a $5 trillion deficit this year in the U.S. and then start to get better. I'm not so sure that's the case. I mean, it may get a little bit better, but $2-3 trillion deficits might be the new normal until you've done whatever it is that you hope to do. Because I don't think you're losing elections right now by having huge deficits. So. They're just going to run and run and run, and gold will run and run and run as well.
Do you have a target for gold? I mean, do you we hear like Bank of America said $3,000 gold within 18 months. I mean, do you think that is realistic?
What struck me about that is how widely it's been aired. So many people talking about that one call, and I know you're a guy who sees so many calls all the time. And I think the story there was how many people are paying attention to that and thinking about it. And not treating it as something that's kind of way out there, like you hear about calls from time to time. So, that to me, it really struck the right chord and the right level, and something I think people will start to believe in. So I think to me, that might just be the starting point, but I think that's the direction we're headed. And for now, I'm not so sure it's important to put a target on it. It's higher, and it's significantly higher.
Okay, so what do you think? There is still one hurdle for gold, and that is U.S. dollar. We're seeing sort of this continued strength in U.S. dollar. What does this do for gold? I mean, can gold go higher in a strong dollar environment?
Right. Well, the whole market is struggling right now. I think there's just a lot of wealth looking for somewhere to go. And we had this huge rout in all risk assets, and the old playbooks go to the dollar and the yen, and that worked, but maybe not as well as you might think. And now the market is looking for something to believe in. It's very difficult to believe in the U.S. and the U.S. dollar for a number of reasons right now, which I'm sure all the watchers could think of. I think we're really on the cusp of something where the market says, listen, I want growth. One of the things I'm writing about right now is the Australian dollar, which is normally it's a growth sensitive currency, and it's a higher rate currency, and it's none of those things right now. But they have fought off COVID-19. So you'll start to see money go into places where they've done better on COVID-19. And then, you see the dollar depreciate there. And then you'll start to see places that are spending a little bit less. I think America's setting itself up right now is a massive deficit country because it has so many problems that really could be solved. And then the final thing holding the dollar together is that it's the reserve currency. But if you get some differentiation of reserve assets from China, from anyone really, say from US dollars into something like gold or into something else, because even as the bonds don't yield anything from the US, well, then I think that really kicks it off. And then you can have this huge unwind of the US dollar once we lose confidence in that as an asset. Now, is that going to happen tomorrow? No. So it's a long-term trade, and the timing of it is extremely difficult right now. But I think so. I think the investor money is getting into gold, but in terms of the U.S. dollar, it's not going to fall apart overnight. But I think we may be near the top of the crest in the dollar.
That's an interesting way to end this conversation, I think. Thank you very much for your insights, Adam.
Pleasure, Niels. Thanks for having me.
Thank you very much for watching. For all your precious metals information, go to kitco.com. Thank you very much. Stay healthy and stay safe.